Good afternoon, beautiful people. Welcome back to Young Money Investing. It is Sunday afternoon, and so although markets will be closed tomorrow in observance of Memorial Day, I am going to go ahead and bring you my technical analysis anyway, my weekly market prep, so that you can better establish price action and trend structure so that you can make better trading decisions and hopefully make more money. Now, as I just mentioned, the markets will be closed tomorrow, which is Monday, May 29th. If you are looking to trade tomorrow, I would just not. Personally, I'm not trading. Nobody else is going to be trading. Volume in the futures markets at all is just going to be super low. There's really just not going to be any point to it. So unless you're trading, Forex or something, and you're going to trade like the London or the Hong Kong session, I would just stay away from it entirely. But other than that, let's just go ahead and jump into the charts. Alright, so we'll start off here looking at the DXY, the US dollar. You can see, zooming in here a little bit, had an absolutely terrific couple of weeks. Coming off of this bounce Thursday, May 11th, has just been on an absolute tear. From that point is up about 2.5–3%. About 3%. I do think that we are going to come back up to the top of the supply zone and see an interaction with the 200-day moving average. Now, whether it continues to move up, whether it rejects back off, catches a lift on one of our other moving averages, and then goes up, whether we reject back off down to the support level, I mean, there's plenty of ways this could go, but I do think that we are going to see a move back up to about 105.4 here. So maybe 105.5, somewhere in that vicinity. And then I would just kind of watch how that plays out. So the other thing to note is, kind of from a more fundamental perspective, if we go right here, this is Thursday, June 1st. This is, technically when the United States is supposed to run out of money. So whether or not that actually happens, or whether we can get our act together and figure out what to do about the debt ceiling, of course, remains to be seen. There is no resolution as of yet, but just some food for thought. That's quite close. I think it's easily foreseeable to kind of see price action move up into this zone, and then Thursday, if nothing happens, we just get slapped right back down. I could easily see some type of interaction like that playing out, but of course you are just gonna have to wait and see. There have been calls for Yellen to kind of release how she came up with a June 1 number. I don't personally know. You might be able to last longer than that. You might not be able to last longer than that. I really don't know. I don't want to hypothesize too much about what the government is going to do. It seems like it's just a good way to get lost in fantasy land. So let's jump over to the NASDAQ. NASDAQ has also been having a pretty good time. You can see we blasted right through this 13,843 level. Kind of a slight gap here from Friday to, Tuesday. It's not Tuesday the 30th, so, but slight gap there. You can see very big, strong candle here, 2.5% on Friday the 26th. We kind of moved up, got a little rejection, and then that strong close up. If we zoom out to a weekly time frame, kind of looking real solid. The next level of test would be about 15,100. We'll go ahead and draw that. That would be right about there. So that would probably be the next level of resistance that you can expect. And after that, it's just all-time highs at about 16,500 or so. Jumping back over to the daily time frame, RSI is starting to look just a little bit extended. Something to keep an eye on. I'm not saying that we're going to correct course just yet, but we might see a retracement back down to this consolidation area, or perhaps even the 50-day moving average, similar to what you saw over here Monday, March 13th. So we'll jump over to the Russell now. Russell still just moving sideways, really nothing to report. We did reject off of the 200-day moving average last Tuesday, the 23rd. Moved back down, didn't really close beneath the 20 or the 50-day moving average, did not come back down to that 1735 level. So just kind of hovering in no man's land right now. Russell kind of lacks direction. It's just, you can see it's been going sideways since Monday, March 13th. So over a month, just about 6 weeks now of sideways action from the Russell. And, really kind of a difficult index to trade. I don't really trade the Russell too much myself personally. I have tried it in the past. It generally doesn't work out that well. It is just kind of a slower moving index, and you get long periods of sideways action. So even within this period of sideways consolidation, you can see that we are in a larger period of sideways consolidation. So it's kind of hard to tell exactly what the Russell is going to do next. I would just kind of keep a close eye on this. We still have resistance at 1923. If we break out of the 200-day moving average, if we get forced lower, of course, we could see a move back down to 1655. Jumping over to the Dow Jones, this downward channel still seems to be intact. You can see that we came down, got a test of the 200-day moving average, managed to hold it, and also kind of wicked this support line at 32,581. Let's see what the low here is, 32,586. So just about 5 points off for the Dow Jones. That's an accounting error. Very close. You can see supported by the 200-day moving average and the support level. Big, strong close on Friday. Not quite a Marubozu candle, but very close. The open here was at 32,795.50. That also happened to be the low. So obviously a very strong bullish directional day for the Dow Jones on that Friday. The only bearish sentiment that we kind of currently have right now is it looks like the 20-day average is about to cross through our 50-day average. That doesn't really worry me too much, so I would expect, as we zoom out to a weekly time frame here, I would expect the Dow Jones to kind of pop back up to this 34,345 level, and honestly even to this 35,400 level. I think that we could see a test of that for the first time since April of 2022. I think that we could see a test of that level, and I don't think we'll break it first try. I think that we'll obviously get rejected back off probably to this 345 level, and then you'll have to see how that plays out. Now, normally, this is where I would insert my trade of the week. However, I don't actually have one for you this week. I looked at a bunch of stocks, didn't really like any setups, frankly. And then combined with, worries about the debt ceiling and things of that nature, there's going to be heightened volatility. So the trade of the week is just sit on your hands, sit on your cash, wait for an A+ setup, and take advantage of that if you happen to find one. But do wait for an A+ setup. Don't be greedy, don't be bored, and just do something for the sake of doing something. That's what amateurs do, and you and I are not amateurs. So thank you guys so much for watching. I do appreciate each and every single one of you. Please go smash that like button for the YouTube algorithm. It really helps this channel, grow and reach more people so that we can help more people make better trading decisions and make more money. I hope you all have a fantastic week. I hope you smash all your trading goals, and I will see you all next time. Peace out, homies.